Hi, everyone. I'm Matt Clark, research analyst with Money Markets. Joining me as he does each and every week is Green Zone Fortunes co-editor Charles Sizemore, and we are back with another edition of Investing with Charles. Charles, lots of things going on in the markets, lots of news, lots of different things, people trading on headlines, a lot of fear, a lot of volatility, a lot of different things. And you and I have talked before about really keeping your eye on the ball. And I think this extends to more than just headlines. Obviously, Russia-Ukraine continues to dominate headlines. They continue to dominate market moves. But there are things within all of this that smart investors like those who are watching need to be aware of. And we've talked about it before. I've talked about it before. I know you've mentioned it before. We've seen tech stocks take a beating of late. It has really rotated investors out of growth stocks, which have just been killing it for the last several years. And now they're rotating into value stocks because fears of inflation that could push those future earnings, those future revenues for growth stocks down and make them valued even less. So it's pushing investors into rotating into value stocks so they get a little bit more bang for their buck as inflation ticks up, and we still wonder what the Fed is going to do. Right now, just in looking real briefly, over the last 6 months, looking at the S&P value and the S&P growth, the S&P value has returned 1.75%, S&P growth down 6.75%. Zero that down into just a month. Both are down. Value is only down 2%. Growth is actually down more than 5%. So we're seeing this rotation where we're seeing much stronger momentum out of value stocks and a lot of paring back out of growth stocks. So what I want to do today is, you and I have talked about this already offline, but for our viewers, I want to talk about three stocks that are strong, especially according to our Green Zone rating system, which you can see for free at moneyandmarkets.com. You can use it for free. Type in any ticker in the search bar, and you can get a look at our Green Zone rating. We basically break down ratings. We give it an overall rating, each stock an overall rating, and we break that down using 6 different metrics, 3 fundamental, 3 technical, and you can see all of that. What I want to focus on today is momentum and value. These are stocks that are very strong values. They are either undervalued or equal valued. They're not overvalued. They're not overpriced, as we see a lot of growth stocks. And these have momentum that scores very high, meaning they are in an uptrend or have been in an uptrend. There might be some paring back as the broader market pares back, but these are stocks that are showing very strong momentum. So that's what I want to do.
Not just are they in an uptrend, they're actually in a stronger uptrend than their peers. And that is a distinction, because generally we tend to think of growth stocks and momentum stocks almost kind of being the same thing. And they really have been for the last 10 or 12 years. There's been no clear distinction between growth and momentum, because it's growth. The growth stocks were the ones showing the momentum. But right now, what we're seeing is it's the value stocks that are showing more price momentum than their growth counterparts. And that is a distinction. It's not the first time. Of course, after the dot-com bust between 2000 and 2008, that was a nice 8-year stretch where value just really exhibited strong momentum.
And so now you and I have talked about it. We've picked out 3 stocks. We scoured our Green Zone Fortunes, our Green Zone rating system on moneymarkets.com, and we have found these 3 stocks. Which is
to say, we have scoured the universe. If there is any stone left to be unturned.
We have left no stone unturned. So what we're going to do is we're going to briefly go into each one of those 3 stocks, break down their ratings, and kind of give you a little bit of a prognosis in terms of what we think is going to happen ahead. Now, again, neither Charles or I have crystal balls. We can't tell you what's going to happen in the future. Anyone who tells you they can tell you what's going to happen in the future is probably lying to you and just wants to take your money.
Or crazy.
Or somewhat, up here. So I'll start, if that's okay. If it's all right, I'll start and give you the first stock. This is one that I've actually written about on occasion at moneymarkets.com. I had my first experience with this stock when I moved from my home state of Kansas to North Carolina, and I was just in awe. The first stock that I'm going to talk about is Ingles Markets. This is a grocery store chain that's based in Asheville, North Carolina. They're primarily in the Southeast, North Carolina, South Carolina, into Georgia, Tennessee. What they do is they strategically place their grocery stores within a 200-mile radius of their distribution center, which is in Asheville, North Carolina. So they do a very strong, they have a very strong supply chain that's not weighted very heavily on a lot of outside sources, because they can truck in their supplies to grocery stores very easily, as they're within a day's drive of their distribution center in North Carolina. So first off, let's look at the green zone rating for Ingles. I'm pulling it up and looking at it. We'll pull it up here on the video as well. As you can see, it rates a 100, which is the highest rating we can give a stock in our green zone rating system.
We are can't be higher than 100%.
No,
that is,
you cannot be higher than 100. It is. We are strong bullish. We feel like it's going to outperform the broader market by at least 3 times in the next 12 months. To break down its ratings, first off in momentum, it scores an 84 on momentum, which is right there in a nice sweet spot in the green zone. Its volatility score is a 96. Now, not to be confused, a high volatility score does not indicate that it has high volatility. In fact, it's just the opposite. It means it has very low volatility, which is what we look at. But if you look at value, and this is where I want you to focus on, it rates a 99 on value, which is the second highest mark you can get on that metric. So obviously, green zone wise, it rates very strong. Like we said, you can't get much higher than a 100. And its metrics in terms of momentum, in fact, all of its metrics are in the green. So it's a very, very strong stock for us to take a look at. Now, if you pull up the stock chart, which we also have here, it's had a very nice uptrend starting over the last 12 months, really starting in about August. The company really took off and had a bit of a low after trading relatively flat, and then it has taken off pretty tremendously up until the end of December. Then we saw the stock market pull back in the beginning of January. Ingles also pulled back, but now we're seeing a resurgence of that uptrend in February and now into March. It's dipped a bit, but again, it's going to be factored a little bit. It's going to be impacted a little bit by those outside sources like broader market downturn, but it is ticking up. Now, in terms of its metrics, I'll go over those really, really quickly. I don't want to waste a whole lot of time, but right now, value, we look at its trading multiples: price to earnings, price to sales, price to book. All of the metrics for Ingles, all of its ratios are significantly lower than their peers. For example, price to earnings. Right now, presently, Ingles is trading at a PE ratio of about 6.03. The broader industry average, 15.26. So you see it is trading at more than half the industry average. Its price to sales is ratio is about a 0.3. The industry average is a 0.8. And its price to book is trading at a 1.49. And its peers are averaging at 2.3. So value-wise, it's very it's significant to show that it is trading at a much better value than even its other grocery store peers. And so I think that's important. So Ingles Markets, it trades, the ticker symbol on the NASDAQ is IMKTA, actually one of the few in the NASDAQ that carried over the five-letter symbol from over the counter to the NASDAQ. A lot of times that changes. Ingles Markets did not. So Ingles Markets is my contribution to the grand scheme of things. I'm bullish on it. I like it. It's a great grocery store chain. We don't have them here in South Florida, but they are all around the Southeast. Very strong supply chain, not necessarily adversely impacted by supply chain issues that you see grocery stores facing across the country that are much wider, more spread out in terms of their footprint. And Ingles, I think, is very strong right now, trading at about $82, $83 per share. And I think it's got a lot of room to grow. It's got a top of about 92. That's its 52-week high. I think it's gonna hit that and maybe even test resistance and blow through that here in the coming months. So Ingles Markets, IMKTA. Charles, you get the other two. I'm going to let you handle the other.
So you'll find this amusing. When you scan the pages and you're just sort of quickly soaking up the data and you're just sort of getting a quick and dirty look. I had looked over that stock, just kind of scanned the name and kept going. I spent too much time in South America because I didn't read it as Ingles Markets. I thought it was Ingles Markets. And I actually thought to myself, I wonder what that company is. I wonder if they do like English language lessons on DVD or something. And I just sort of just kept
Rosetta Stone.
like Rosetta Stone, pretty much. That was, when I was just kind of doing a quick scan, that was my initial thought. So anyway, no, I do second your enthusiasm for the stock. I think this is the kind of sector that it makes sense to be in these days. Right now, people are looking for kind of tried and true, low tech, simple businesses, and you don't get much more simple than a grocery store chain. I think that is a nice place to be. Now, moving on, we've been bullish on energy just as a team for really the better part of 2 years now. We were actually pretty early to this trend. Adam's been really kind of, pounding his fist on the table about how he thinks energy is a great bargain. We've made energy recommendations in Green Zone Fortunes. I've written, you've written, we've all been writing about different opportunities in energy. And that brings us to our second pick, which is the French oil and gas, integrated oil and gas major, Total. This is interesting for a couple of reasons. One, energy had gotten so ridiculously cheap after nearly a decade of bear market conditions. Energy really started topping out back in 2014, and then 2015 and 16 were just disaster years. And then, of course, the pandemic hit, energy consumption and demand fell, and it was just almost the final death knell. Oil prices went negative for a while there, if you remember. So energy went through a bit of a consolidation where some of the weaker players just got thinned out. And that strengthened the position of the remaining powerhouses. And Total is one of them. Now, where it gets additionally interesting is not only is energy still cheap, energy's been trending higher, been showing fantastic momentum now for a while, but it's still cheap. The price momentum we've seen hasn't been enough to make the stock not be cheap, not make the sector not be cheap. But Total, in addition to being in a cheap sector, it's also in a cheaper part of the world. Non-US stocks have really lagged the US for years. And that has made them comparatively cheaper than their US counterparts. Now, we tend to have a recency bias in the world of investing, we think, and also a home country bias. We tend to think, okay, America's where the action is. This is where the best companies are. American stocks are always going to outperform. That's not true. From 2000, 2008, which was a period where value stocks did well, non-US stocks also did exceptionally well. You would have made more money investing outside of the US than inside the US. So we have multiple kind of overlapping themes there. This is a value stock in a value sector in a value part of the world. All of that's a very nice setup. It also pays a nice dividend of about 5%. And of course, dividends are something I really like to look for. So you look at the stock, it has excellent momentum right now. It's still exceptionally cheap, has an excellent value score. Overall, I love this stock. I recommended a very similar stock in Money and Markets, actually, a week or two ago. The Spanish oil and gas major Repsol. And really the same logic applies to both. If you're bullish on oil and gas, and we are, if you're bullish on non-US stocks, and I am, it makes all the sense in the world to have exposure there.
Right now, just to kind of give you an overview, looking at Total's ratings, it rates at 95 overall. It's strong. We're strong bullish on the stock, very much like Ingles. We expect it to beat the broader market by at least 3 times. Yeah, Ingles. We expect to beat the market by 3 times over the next 12 months. Its momentum rating is a 98. It has been in a consistent uptrend since about July of last year. And its value rating is a 96. Before I ask my question of you, Charles, just to kind of give an overview right now, Total is trading at a PE ratio of 8.3. The industry average is 15.5. Its price to sales is at 0.7. The industry average is 1.3. and the price to book is 1.2. Industry average is 1.8. So its trading multiples are all significantly lower than their counterparts. Now, the question I do have here, and I don't want to get into the geopolitics of it or anything like that, because we all understand what's happening with Russia and Ukraine. We all understand how big of an oil and gas player Russia is, especially in Europe, with Gazprom, the state-owned.
Is there something going on over in Ukraine right now?
Exactly. Yeah, exactly. Now, one thing when I look at its stock chart, Total topped out at around $60 per share. This would have been back in early February. It's been trending downward a little bit, and I want to kind of address that a bit because our philosophy is always buy high, sell higher. But what we see here is a bit of a downtrend for Total. If you're an investor that's looking at this as a potential investment idea, give me the rationale as to why this still works, despite the fact that we're seeing a bit of a downtrend here over the last month.
Sure. The overall uptrend is still very much intact. It has definitely pulled back over the last couple of weeks, but that's perfectly normal within an uptrend. And right now, the sector is in an uptrend. Energy in general is still doing phenomenally well. So I would not be too concerned about a slight pause in the stocks uptrend, given particularly what's going on in the world right now. You do have to take that with a grain of salt.
And its value still remains very, very good, and its momentum still remains very good as well. These ratings are as of earlier this week, so even that downtrend is priced into our rating system, and it still shows very strong momentum going forward. So I think right now, it's got an average true range. It's right around 3 or 4%, which is very, very strong. So we think this momentum is going to reverse itself and get back into the positive here very soon. So that was TotalEnergies SE. It trades, I believe, on the New York Stock Exchange. The ticker symbol is TTE. And Charles, one more pick from you, and to let everyone know these are strong momentum and value plays to look at as value overtakes growth in the market.
You really can't go wrong with investing alongside Warren Buffett. And so our final pick is Berkshire Hathaway. Now, if you're a baller, you can go ahead and buy the A shares, but they're a bit pricey, multiple hundreds of thousands of dollars. So
to say the least.
You might want to look at the B shares instead, which are significantly more affordable. But so Berkshire Hathaway, if you want basically a gritty, diversified piece of America, it's Berkshire Hathaway. They own a little bit of everything. Now, Berkshire Hathaway traditionally has been kind of considered kind of purely an old economy stock. It's really not anymore. Today, it's a bit more diversified. It has a large allocation to Apple, for example, but its core portfolio is still kind of gritty, good old fashioned gritty American capitalism. Everything from insurance companies to railroads to See's Candy, for crying out loud. I mean, it's just kind of very simple, basic businesses run by, of course, one of the greatest investors to have ever walked the earth. Now, it is funny. Warren Buffett is always just kind of associated as the value guy. And really, for the last 30 years, he hasn't been a pure value investor. He's been more of a quality investor, kind of growth at a reasonable price. He's more of a hybrid, right? And that's actually one of the things that makes Berkshire Hathaway interesting. This is a growing company. He's not just buying discarded junk companies that are cheap. He's buying companies that have a good long-term set of prospects, right? But he buys them at reasonable prices. And so I really think Berkshire Hathaway is one of those stocks you can buy and hold forever. Warren Buffett won't be with us forever, of course. The man is over 90 years old, but he's put together a fantastic collection of businesses. And when Berkshire Hathaway is reasonably priced, I think it makes sense to accumulate shares. And that's where we are today. It rates well on momentum. The shares have been trending higher pretty substantially, and it rates competitively on value.
Right now, Berkshire Hathaway, the B shares, and basically the B shares, and the difference between the A shares and the B shares is voting power. I think, if I understand correctly, that and price, because the A shares are astronomically high priced, whereas the B shares are pricing in at right now as I look right around 317, 318 a share. So a little more affordable if you're looking to break into Berkshire Hathaway and just really can't kick over that 5 times Google rate to buy a stock. But overall, the stock rate's an 81. We are bullish on the stock. We expect it to perform, beat the market by at least 2 times over the next 12 months. Its momentum rating is an 80, also in bullish territory. And then if we look at its value score, it scores an 82, 83 on value. And it's a very low volatility. Its volatility score is about a 97. Again, the higher the volatility score, the less the overall volatility for the stock. And if you look at the stock chart, which we'll pull up here, it traded relatively sideways out of the summer months last year, but then in around early December, this stock really took off. Right around quarterly report closings, and you saw 13F filings and whatnot to see exactly what Berkshire Hathaway was holding. I think a lot of people saw exactly where Warren Buffett's mind was going, and they really bought into it. It reached a top of about 324 back on my birthday in January, and it is testing some resistance at that mark. Right now trading at about 317. So overall, multiple wise, it is, if you look at just the dollar amount, it is expensive, but compared to its peers, it is a fantastic value right now. Price to earnings ratio is at 8. Industry average is about 10.5. Price to sales at 2.5. Industry average is a little lower at 1.3. And it's right now it's price to cash flow. Here's something else. We don't really talk about this a whole lot, but the price to cash flow will shock you. The price to cash flow for Berkshire Hathaway is at a 7. For its industry peers, 27.
No, Warren Buffett has always been a big believer in cash flow. He likes companies that just gush cash. Exactly. That's been his thing for how many years? 50. That's been a big important theme of his. Cash, all about cash flow. So the beauty of Berkshire Hathaway is if Warren Buffett were to pass tomorrow, and I hope the old man lives forever. The guy's a walking legend, right? Mm-hmm. But if he were to pass tomorrow, the collection of businesses he's assembled in Berkshire Hathaway, this is something you can hold forever. These are just good, timeless businesses. So that throw off a ton of cash.
Exactly. So to recap, we've given you 3 stocks that using our green zone rating system, which again, I'll plug, you can find and use for free at moneymarkets.com. We are very strong momentum stocks. They are very strong value stocks. And in a lot of cases, these are also very strong in terms of volatility. They have very low volatility. They're not going to move down a whole. You're not going to see a lot of downside here. You're probably going to see more upside. The 3 we chose for you are Ingles Markets, IMKTA on the NASDAQ. That is a grocery store chain based out of Asheville, North Carolina. Then we have TotalEnergies SE, trades on the New York Stock Exchange under TTE. This is a French oil and gas giant that is trending very well. And then finally, we have Berkshire Hathaway's B shares, BRK.B. And this, of course, Berkshire Hathaway is an umbrella company for a ton of different subsidiaries that range from insurance to rail to utilities to
jewelry stores.
Jewelry stores. Natural gas, coal, wind, solar, hydro, nuclear power, a wide range of things. So BRK.B, and that trades on the New York Stock Exchange. Those are the B shares. Don't be confused with the A shares because those are very expensive. Look at the BRK.B shares. So Charles, any parting shots here as we talk about momentum and value?
Well, no, I would just reiterate that, look, value, we love growth stocks. That's a big part of what we do in Money and Markets and Green Zone Fortunes. We do love growth stocks, but growth stocks are not the only game in town. Right now, value stocks are looking awfully good. So ignore them at your peril.
Exactly. So again, IMKTA Ingles, TTE, TotalEnergies SE, and BRK.B, Berkshire Hathaway's B shares. Those are our thoughts and looks at 3 very strong value and momentum stocks that you should be taking a look at for your portfolio right now. So again, visit moneymarkets.com, use our green zone rating system all for free. Type in the ticker symbol of any stock out there that you can think of, and you will see its rating system overall, as well as broken down by the 6 metrics. And very easy to use. There's a little search bar up at the top of moneymarkets.com. You just type in the ticker or the company name, and it'll give you options. You pick the right one. There you go. You'll find a wealth of information. You can set up your own watch list where you can maybe have your own watch list of stocks that you're looking at as potential investments, track how they're doing on our Green Zone rating system, look at them, get all the information you need, all right there, and is all for free to use. Also, speaking of energy, I'd be remiss if I didn't mention, again, we talked about how bullish Adam, Charles, and I are on energy, and not just traditional energy, but renewable energy as well. And coming out here, our team is putting on the final touches on a series of reports that we believe are going to give you very strong insight into renewable energy, and would definitely encourage you to take advantage of that. We're going to put a link up top on how you can find out more about our flagship service, Green Zone Fortunes. That is where Charles, Adam, myself, and our entire team work hard to give you a ton of analysis, in-depth looks, and stocks that we believe are going to crush the market, all for less than the price of a cup of coffee, depending on where you live. I'm kidding. It is less than the price of a cup of coffee, no matter where you live. Hey,
I like good coffee, man. I buy good stuff.
I'm a fan. I'm a fan as well. But you can get all that research, all that data, all that information, plus our insights into those stocks that are going to crush the market over the next 12 to 24 months at Green Zone Fortunes. We'll put a link up top. You have a question you want to ask Charles, myself, or Adam about the broader market, maybe a specific stock you'd like us to take a look at, you can do so two ways. One, you can comment down below here on our YouTube channel. We'd love to see that. Or you can email us. Our email address is feedback@moneyandmarkets.com. And we would love to hear what you have to say. Maybe you've traded on some of our recommendations. You've done well. Let us know. We'd love to see that. Maybe you are a fan of Money and Markets. We'd love to see that as well. Or maybe there's something you'd like us to take a look at, whether it be cannabis, dividends, energy, anything you can think of, send it our way, and we will be more than happy to put that on our list and address it in future videos. Thank you to everyone who watches all of our videos. We love to do this. It's all for you to help benefit your portfolio and to boost your growth and to make sure that you are well off in whatever your future plans are and whatever you're using your investments to accomplish. He is Charles Sizemore. He's the Green Zone Fortunes co-editor. I am Matt Clark, research analyst for Money and Markets. Until next time, everyone, safe trading.